Welcome to this IFRS Keys presentation by BhalaGood. I'm Glynis Carthy, and in episode 3 of the coronavirus series, I'll be taking you through an amendment to the Leases standard. This specifically relates to rent concessions that have been given as a result of COVID-19. IFRS 16 can be complex to apply when changes to leases occur. Now, those could be changes that relate to the lease payments. They become more or less. The lease term, it becomes shorter or longer, or perhaps the amount of space that is leased, either it increases or it decreases. All of these changes to leases need to be assessed to determine whether they are lease modifications or not. And once we know that something is a lease modification, we need to make a further assessment as to whether it's creating a new lease or whether in actual fact it's just a change in the scope or the consideration that's paid for an existing lease. What we found as a result of coronavirus is that many lessors have started giving rent concessions. Now, these could be something like a rent-free period or lower rentals for a specific period. However, all of these rent concessions could be fairly complex to account for if you need to decide whether each one is a lease modification or not. And in May 2020, the IASB amended IFRS 16 to introduce a practical expedient for lessees relating to certain rent concessions that arise as a result of COVID-19. The practical expedient for lessees says that a lessee may elect not to assess whether a rent concession is a lease modification. However, that election may only be used if certain conditions are met, and those conditions are in paragraph 46B, and they are on slide 4, which we'll discuss shortly. What the impact of this is that any changes in lease payments that relate to rent concessions in these circumstances are treated as if they were not lease modifications, and we will look at that accounting shortly. Paragraph 46B outlines the requirements that need to be met before a practical expedient can be used. And there are 4 requirements. What you'll see in the top block, it says that it applies only to rent concessions that occur as a direct consequence of the COVID-19 pandemic. And so that's the first requirement. And the next 3 are in the bottom section. So it goes on to say in the top section, it says that only if all of the following conditions are met. So moving from left to right, the first condition is that a change in lease payments results in revised consideration for the lease that is substantially the same as or less than the consideration for the lease immediately preceding the change. So that's number 2. Number 3 is any reduction in lease payments affects only payments originally due on or before the 30th of June 2021. And the last requirement is that there is no substantive change to other terms and conditions of the lease. I'm going to use a decision tree later on to discuss the accounting as shown on this slide 5 and on slide 6. So I'm not going to discuss it any further. And then also slide 7 is about the disclosure requirements if this practical expedient is chosen. This amendment is effective for annual reporting periods beginning on or after the 1st of June 2020. However, what is permitted is early application, and you will see that, in fact, either in an interim or annual financial statements that have not been authorized for issue at the 28th of May 2020, this amendment can be chosen. What the IASB did is it discussed this amendment in, I think it was late March, maybe early April, issued it for comment with a very short comment period, finalized it in May and made it effective immediately. So it just shows how urgent this amendment actually was. Regarding transition, you'll see that it is applied retrospectively, but what we do is we recognize the cumulative effect of that retrospective application by adjusting the opening balance of retained earnings or whichever other component of equity is appropriate. We adjust that at the beginning of the annual reporting period in which the lessee first applies the amendment. And then the last aspect, just to touch on briefly, is that there's a disclosure in paragraph 28F of IAS 8 which does not need to be made in this circumstance. This decision tree can be used to consider whether the IFRS 16 practical expedient can be used. You'll see on the left-hand side, there are 4 blocks all in bold. Those are the 4 criteria that need to be met before the practical expedient can be applied. So we'll start off with the one right at the top. First of all, considering whether the rent concession received is a direct consequence of the COVID-19 pandemic. If that is met, we then move on to the next one down, considering whether the change in lease payments results in revised consideration for the lease that is substantially the same as or less than the consideration for the lease immediately preceding the change. If that is met, we move down to ask of the next one, does any reduction in lease payments affect only payments originally due on or before 30th of June 2021? If that is met, we move down and we lastly consider whether there's any substantive change to other terms and conditions of the lease. If there are no other substantive changes, we move down, and what you'll see there in green is that the lessee is entitled to apply the practical exemption. Right at the bottom, you'll see the last question is whether the lessee actually chooses to apply the practical exemption, because the lessees do not have to. And if the answer is yes, then we move to the right to the green block where it says that the lessee does not account for the rent concession as a lease modification. Instead, what it does is it treats that rent concession as a variable lease payment. And what that means is that it affects profit or loss at the time that any event or condition triggers the payment. If we move to the right-hand side, so in other words, if all the answers, or if any or all of the answers were no, then we'll see that in blue, the lessee is not entitled to apply the practical exemption. And what should the lessee do in this instance? And you'll see there the block on the right in blue, the lessee would remeasure the lease liability. And the way that that would be done is to calculate revised payments and to discount those using a revised discount rate. In other words, not the discount rate at for the initial lease. That would then also, the opposite side of that would be to decrease the carrying amount of the right of use asset. And then the right of use asset, the depreciation would be adjusted over the remainder of the lease term, thereby increasing profit or loss. This slide is not related to the amendment to IFRS 16. What it illustrates is how we consider whether something is a lease modification, and once we know that it is a lease modification, how we decide does it give rise to a separate lease or not. So I'm not going to discuss it. It's there for information purposes when you're deciding about lease modifications under normal circumstances. Thank you for listening to episode 3 of the coronavirus series. If you have any comments or questions, please feel free to contact me.